Welcome to No FOMO Charts YouTube channel. In this channel, I talk about stock charts and technical analysis education. Disclaimer, these videos and charts are for educational purposes only. This is not financial advice. Please remember to click subscribe and turn on notifications for new videos. Today is July 17th, 2020, Friday. Let's start with the DJI, Dow Jones Industrial Average Index. So we are in Q2 earnings season. Q2 earnings, we just finished week 1 today. What does that mean for the market? Well, the market had a bit of a reaction. Okay, so what happened? July 10th, we stopped our video last time. Still in a very short-term uptrend. We had a bullish breakout above this consolidation level at 26,432, finding resistance, temporary top 27,035, then pulling back right now. So I marked in this upper yellow box, okay, resistance zone, support in this lower yellow box, and these lines as well. So a bullish target would be this support, this resistance above right here at 27,653 up here. I'll mark it in yellow for next time to see if we hit that target. Bullish to the upside. Bearish target ultimately would fall back down into this consolidation range. So this breakout's fake out failed, then pull back down to support down here at 25,000. Okay, so I'll mark that here for next time. 25,000 is the bearish target. So let's see. Again, it's news and earnings. It's all about that for the next month. Okay, next, S&P 500 Index, SPX. I already marked this for a different class. So let's do it again. Or actually, we could leave it. So the market was consolidating. Remember that? Under this level. Okay, it kept consolidating, but it tried to break out above this resistance 3 times. It's hard to see, but this, at least for this weekend price action, that's not good because it got rejected from here, 32.32, 3 to 4 times. All right, and it's very weak doji action, weakness right here. But that doesn't mean we can break out. Doesn't mean we can't break out. It's possible. Anything's possible in the market. Okay, so upside breakout targets would be these 3 levels right here: 32.60 right here, 33.30, and 33.96 to the upside. Okay, because now if you notice, there's a large trend line. This one acting as resistance. So it's got several resistance levels to break out of, all the way going to the left side of the price. All right, but bearish targets very simply could fall back down to 3,000 eventually. Bearish target, because if it's stuck in a consolidation range, we're not going to break out higher. If there's anything bad with earnings or news, then I suspect it could go down to 3,100. We'll mark it 3,000. Okay, next. Nasdaq. The big story this week was Nasdaq tech pullback. But it's not over yet because we're in a strong uptrend for several months. Even with an overextended Nasdaq price right here on July 13th, okay, there's bearish news, the pullback, self-fulfilling prophecy fulfilled, and we pull back negative 5.69%. Very nice, easy, short opportunity. So, but where did it fall down to? Right down to support trend line. Okay, so bulls still buying this dip in terms of the support trend line. But it's been an interesting week with news and earnings. It's not, because we don't have tech earnings yet, it's not going to the moon. The reaction is it's pulling back, it's consolidating a little bit. So remember, tech earnings coming up in over the next 1 to 2 weeks. So we're gonna have to see. The big signal for me is if we all of a sudden lose this support trend line, then something will be fundamentally shifted in the market. Okay, so it's still technically an uptrend, at all-time highs. But if it comes down and starts downtrending here, then I suspect the support levels at 98,000 and 9,500 will come into play. All right, so resistance above 10,829 and 11,000. So there's 2 bullish targets and 2 bearish targets. So if you're watching the market, they just got to very closely monitor the earnings and the news. Next, Russell 2000. So it's been the price has been in a symmetrical triangle going sideways. So what does it mean for us? Well, somebody might have interpreted this as a dirty upside down head and shoulders, or just holding support trend line or symmetrical triangle. Whatever somebody views it as, we had a little bit of a breakout, okay, 2 days ago. So breakout and consolidation. So right now, price consolidating just for 2 days. Upside resistance, bullish target would be 1,535 to the upside right there. Downside target would be 1,345. So what could happen is breakout, test of this, then break out more to hit this resistance level. If not, breakout, fail, consolidate, break down, test, and then end up here at 1,350. So those are 2 levels you want to watch out for right now. VIX, the VIX. Okay, so I drew these 2 lines for a different class. Basically, the price is consolidating for almost over a week sideways. So again, 2 things to really note for the price. It's downtrending right now. Not because of that line, but because of this price action. Higher high, but then lower high, and then a lower low, and then a lower high. And so it's seeking out support right here at around 2540. Remember, this is volatility of the S&P 500 index. So related to options. So again, trend line support, okay? An interesting downside bearish target for VIX would be right here, 2350. All right, so I'll circle that for next time. We'll see what happens. Again, very well, if we consolidate, this is totally possible. If we break back up to the upside with volatility in the VIX, then the obvious upside target, first target is 3260, and then 37, and then 40.8, and then 44.1. So again, 3 targets on the upside, 2 targets on the downside would be 2350, 2210, and then 18. So let's keep those levels in mind. Gold, XAUUSD, XAUUSD, gold spot, price. So we are in an uptrend. We are in an uptrend still. And it hit my target of 1800. Okay, remember I called that? Just rewind my videos and you'll see that I said the bullish target peak could be 1750 to 1800. And we hit that target, but we've been consolidating, going sideways for 7 days. So, is it still an uptrend? Answer is yes. Except now the big support is right here at 1737. We can still maintain the uptrend on gold because higher high, higher low, higher high, higher low, higher high. Where could the higher low? We could very well come down to 1783 and still maintain this higher high, higher low pattern uptrend. Then the next bullish target, if this keeps going in an uptrend, would be 1832, 1855. Especially at the top of this channel. Where is that? 1830. So I'm going to circle that as a bullish target. Bearish target, okay, would be, and for gold, this is a large move if it comes back down to 1741. All right, not straight down in one day, but downtrending back down, and that could create some kind of possible ugly head and shoulders, right? Like this, and maybe come down to 1740 support, and that would also be the middle of this channel. So we want to watch out for that, 1730, 1740. We'll just watch what happens. DXY, US dollar currency index. So we're falling back down to this support level right here. Where's the support level? 95, 94, 95.66. Then actually there's another support down here at 95.04, 94.65. Okay, 95.74. So potential scenarios. If the US dollar currency index turns bullish, then the upside target right here, 97.60. First one, second target, 98.70. If that does not happen and we lose this support and we keep falling down to the downside, look for 95.04, 94.65. Remember, this is to me related to it's the USD versus a basket of global currencies, mainly the euro and the yen and the pound. So again, it's that relationship. It's not just the USD in isolation on a chart. So just remember that. Okay, Bitcoin, BTC, USD. All right, we're going sideways, consolidating, still in a short-term daily downtrend. You see this? That's a higher low, but a lower high. Almost a lower low on the wick, okay? Then a lower high. So it's tightening. It's tightening. but still it's in a downtrend if you want to be very specific about this part of the price. But if we zoom out a little bit, include some of the older price history from May, so basically we're just getting stuck right here for now, okay? The FOMO, the hype, the excitement about the halvening got overruled by COVID, okay? So we need to remember there is still a relationship between crypto and other commodities, other assets. Because remember, from a global perspective, crypto is still just another asset for now, okay? Some people might think it's the future of everything. And yes, I agree with that. But at the same time, at the current moment of time right now, Bitcoin is just another asset in the global marketplace. So again, watch what happened here with the COVID-19 dump is when you have the entire global markets and oil and gold and Bitcoin all dumping, they're all going to fall together. Okay, they're all going to fall together. So again, right now is if you have this hesitation in the crypto market, why is it happening? Well, because people are busy with stocks and options, right? It's earnings season. Okay, so Bitcoin, in my opinion, is not going to see a huge move unless we see a huge move in global markets as well. Okay, so if you watch my trading view, if you look at my trading view, I have a nice long-term setup for Bitcoin. So what is it? If you look here, basically, it's easier to see in a weekly chart, but I'll show you on the daily chart. Long-term, 3-year long-term trend lines. Okay, you see this? Support, 1, support, touch, support 3. Resistance on top, resistance 1, resistance 2, resistance 3. Now we're stuck at that upper resistance trend line. All right, so we're stuck between 9,000 and we're stuck between 10,000 in the price. So we're downside target first, just to manage risk first, is, according to my analysis and support on the chart, 8,500 support 1, 7,000 support 2, 5,000 support 3. There's probably another intermediate one inside here, 3,900. Then 3,000 support 4. Okay, resistance 1 above, 10,000. Resistance 2, 12,000. Probably intermediate 1 at 14,000. If we break all of those, bullish to the upside, then 16,000 resistance, then 19,000, 20,000 resistance. It's very simple. It's key what happens here, right now. In the next 6 months for crypto is important, all right? Because you have lessening, lower volume, all right? Breakout is possible, but again, where are we right now? Globally, it's Q2 earnings season right now. We have COVID pandemic. Just think about it. Does everyone want to put their money into this like right now, today, at this minute? Maybe not. What will happen though is the FOMO, once the FOMO activates, like if the whales and the professional hedge funds say, boom, here we go, 12,000, then everyone's going to FOMO in right there. And then probably what the pros are going to do is pull back, stop everybody out, and then break out if it happens like that. So just remember those levels. That's my long-term call on Bitcoin. Okay, US oil fund, USO, ETF. So what happened? Last time we were saying we were in a ascending triangle pattern, okay? But what happened is the price, we had that OPEC JMMC meeting this week. It was 2 days ago, okay? Not so much super bad news from that, basically, in simple terms. So what's going to happen? Markets are going to keep going. Market's going to keep going. So I have to adjust these lines a little bit. Okay, so this turns to here and this becomes that. It's still an ascending triangle pattern to me. All right, so we'll still extend it out. Again, we need large volume confirmation down here like this. If you see to the left, we have large seller volume. We need, if this is going to true breakout, let's say if we have good news, we have good earnings, good prospect for oil, the demand and supply globally, then you want to look for large green volume, okay, with the breakout. All right, so if it just breaks out and there's like no volume, it could still happen because look at this, for example. That's the proof that it's possible, but it's suspicious. Remember, a lot of hedge funds manipulating U.S. oil. Want to watch out for that. So this is also my trading view chart. It's my calls in there on the chart in my account. So again, upside target for me is still plus or minus 13, 15%. So upside target still $34, downside target is still $24. So again, the news and the market reaction is very tepid. It's very cautious right now. But look at this pattern, okay? Just remember that. Last one for today, natural gas, UNG, natural gas ETF. Here we go. So, So, again, what happened with natural gas? We didn't quite hit this target of 1164. The bull run stopped, okay? This upside down head and shoulders has been fulfilled. How do we know? Measure the top. Again, it's not perfect, but it's general. Say 15%. So from the breakout, let's say from this spot, maybe here, is maybe around 12%. Close enough. Then it turned into a downtrend. Okay, pull back. What happened was try to test this support level, the neckline, but it couldn't hold quite there, then break down to the downside. All right, so again, downside targets, we're actually at one right now, support $9.90, $9.50, $9. Support, resistance to the upside, $10.86, $11.24, and $12 to the upside. Okay, so again, keep in mind there is a super strong 1, 2, 3, 4, 5, 6 touch point way down here. It's not impossible. Okay, $7, $6.50 natural gas is not impossible. And neither is going to $12 natural gas. That's just the up, even 13. Okay, so just want to watch out for this. I'm going to go ahead and I'm going to erase this. Well, actually, we'll just leave it. Okay, we'll leave it there to see for next time. So, all right, everyone, that was the US stock market index technical analysis. Please remember to click subscribe, hit that like button, turn on notifications for new videos, leave a nice comment if you like to. Thanks for watching, and I hope you have a great week.